In this video, I'm going to talk about the short Australian dollar against the US dollar. So essentially, I'm looking to increase my position in this trade due to the announcement by Trump that he's going to put tariffs on China. Essentially, there's a bit more trade war angst going on, and the Australian dollar seems to be quite bearish, just broadly bearish. So that's the Australian dollar against the US dollar. Now the Australian dollar against the Swiss franc, you see that's experienced some recent bearishness there, and it's going to new lows. Australian dollar against the euro, same thing, long-term downtrend, bit of recent bearishness. It's going to new lows as well. It's actually gone up against the pound, probably more a reflection of how shit the pound is doing versus the Australian dollar actually being strong. Australian dollar against the yen, you can see, yes, bang, at new lows again as well, and long-term downtrend. So that's a few currencies there that we can kind of see what's going on, and it does seem to be bearishness and long-term downtrends in general, other than the pound. So going down to a weekly chart, see past 2 weeks have been fairly bearish, long-term downtrend, a bit of consolidation here, and then continued downtrend. And once again, now looking at the daily chart, very extended bearishness for quite a while now. Long-term downtrend here. We're seeing lower highs. This is a very classic looking downtrend. So I'm going to essentially build a bit of a position here. My risk in the short Australian dollar position is only, even if I add on this trade, it will only go to 0.73% of my portfolio, which is not a lot, and really at this stage I'm just trying to accumulate a position. So I'm going to use a legging in strategy, and essentially the whole idea of going short the Australian dollar is to have that hedge against the trade war and negative performance in China. Also to increase my risk on the Australian dollar, US dollar position, kind of just balance out the portfolio, add a little bit more of a hedge against China, and that sort of philosophy. Correlation, once again, it helps the hedge. Different way to play the whole China thing, trade war thing, other than buying gold. And it's also something that will benefit if the US dollar strengthens. Technically, it's at new lows. Intermarket, as we've seen, it's broadly weak. So there's probably about a 10% chance that it can pop back up to 0.7. 30% chance that it will pop back up to 0.69, so quite likely. 30% chance it's going to go nowhere. 20% chance that it'll go to 0.66. And 10% chance it will go all the way to 0.6. So those are the odds that I'm banking on. If the price moves up, I'll wait for an appropriate time to actually add to the position, because right now, since I don't have a lot of exposure to it, I'm happy to actually add to the position if it goes against me, assuming that there is good reason to add. If the price moves down, I'll hold. Psychologically, I may have been affected by the US Swiss franc, which is the biggest loss I've incurred so far, so that may be affecting me, but we'll see how all this plays out.